Hello and welcome to Take 5 with Sax. 5 minutes of our 65 years of experience where we address important topics that impact your business and your life with our experts here at Sax. My name is Todd Polinak and with me is my partner Craig Winkipedia Casano, Winky for short. And today we have our resident expert Marie DeCaprio, who is a partner in Sax Wealth Advisors, and she has a love and passion to help people to be successful in their investing as well as planning for their future. She's going to share with us today 3 things that you should consider doing now so that you don't have any regrets later. But before I turn over the mic to Marie, I want to ask Craig if he could share with us 3 things that most people don't know about investing and the market. Craig, take it away.
Thank you, TP. So before I pass the mic to Marie, I'm going to share a few fun facts with our listeners. From a retirement perspective, the current median savings for those in their 60s or the traditional age range approaching retirement is $172,000. What's more, the recommended savings for retirement should be 3 times your annual salary by the time you reach age 40 and 6 times your annual salary by age 50. Shifting gears a bit, we all saw what happened with the recent seesaw stock price of GameStop. I wanted to share the top 3 performing S&P 500 stocks of 2020. They are Tesla, Etsy, and Nvidia, which is a computer systems designer, graphics for laptops, workstations, and mobile devices company, which makes perfect sense considering where we are in the world today. They saw price increases of 743%, 302%, and 122% respectively. Quick final fact. The New York Stock Exchange was founded on May 17, 1792, when 24 stockbrokers signed the Buttonwood Agreement on Wall Street. They met beneath, a buttonwood tree, and formed a centralized exchange. Ironic that it was May 17th, the extended 2020 tax deadline. There you have it. That's me winking at you.
Thanks, Craig. Marie, the floor is all yours, so tell our audience what 3 things they should be doing now so they have no regrets later. Marie?
Thank you, Todd. There are 3 things you need to know about investing now. The first is to have an investment plan. Very often, investors are waiting for something to happen before they invest. It could be they are waiting for the market to go up, or waiting for the market to go down, or waiting for some other event to take place before they start. But the time is always now. Your investment plan should reflect the type of portfolio you need to be invested in that gives your financial plan the best odds of success for you and your family. That's all that really matters. It doesn't matter if you beat the returns of the S&P 500 or the returns of your friends or those of your brother-in-law. All that matters is that you have a portfolio you can stick with over the long term to allow you and your family to achieve your financial goals. The next important thing to know about investing is don't get caught up in the noise of the market. The latest hot trends and the hottest investments don't always make sense for the long-term investor. Remember, you want to have a diversified portfolio, not just own what is hot today. The relationship between what's hot and what's not changes over time, and sometimes it changes very quickly. You don't want to be on the wrong end of that trade when the tide turns. Going back to item 1, we need to understand what is the right portfolio to meet our long-term objectives. It's okay to want to take a little extra risk, but consider this your play money, which should be a very small portion of your overall portfolio. If you're not willing to lose it all, you shouldn't invest in it. The third and last thing you need to know about investing is the changing landscape in portfolio construction. For the longest time, a 60-40 portfolio was the perfect blend of stocks and bonds for just about anyone. But given the fact that interest rates have yet again hit an all-time low, the prospects for the bond portion of this allocation seem quite dismal. It's time to start rethinking whether the 60-40 works for you in this low interest rate environment. We are thinking about what other kinds of investments we can add to portfolios that will add return over the expected returns for bonds and give us some diversification over stock market volatility. We also need to keep in mind the need for cash in a portfolio, even though those returns are zero right now. Cash is an important place in a household allocation, especially for those who are retired and living from their savings. We don't want to have to sell investments every time we need to fund expenditures. The cash should be readily available. Now is the time to talk with your advisor about these 3 things you need to know about investing and what makes the most sense given your specific circumstances, needs, goals, and desires. Back to you, Todd.
Thanks, Marie. Ending our podcast with a quote in the spirit of our discussion today: an investment in knowledge pays the best interest. That's Ben Franklin. If you'd like to ask a question about today's topic or any topic, have a comment, or like to learn more about us, just send us an email at take5@saxllp.com. Sax is committed to being our clients' #1 advisor by understanding their vision and providing solutions that exceed expectations to assure their success. Every day we strive to live our tagline, Sax, expect more. Thank you for taking 5 with Sax, and wishing you all an amazing and profitable day.